Hello friends, this is Raj Sastry from Raj Option Trading. Today is Feb 25, 2022. Market is pulling back pretty hard. It's a great time to buy top quality software stocks. They typically tend to do very well. So we'll start with the market update. Look at top software stocks to buy with price more than $10. Then also let's look at top software stocks to buy with price less than $10. So with that, let's jump in and get started. Look, from a market perspective, we are in a very turbulent market with the uncertainties around the geopolitical and the interest rate hike with the high inflation. Look, market came down, went higher, came down again, and yesterday we had a nice big green candle, and now market is opening up to be a little bit down. As you can see here in the futures market, we are down about 134 points in the Dow Jones Industrial Average, and similar pattern in S&P 500, down big time, going up, down, a big green candle. And look, we are down in the futures market, down 16 when it comes to S&P 500. And similar story, Nasdaq also in the same story. All the indices are now below 200-day moving average, as you can see here. And we got Russell 2000 also down, as you can see here. In the futures market, it's down about 8%. So today is a coin toss. We can stay little lower today, or we may go higher. It's really a coin toss because we are close to the flat line with slightly down, in the futures market. But the long-term trajectory is going higher. It's a great time to buy good quality stocks. We look at top software stocks to buy. If you look through the rear view mirror, all these blips here are great buying opportunities. This time is no different. It's a good time to buy quality stocks. Take advantage of this blip here and go from there. All right, so with that, let's look at fear and greed. From a fear and greed index perspective, look, pendulum is swinging right now to the fear side of the house. I expect this to probably go around 20 or so, then make its way higher. That's one of the reasons when the pendulum shift all the way to the fear zone, that's the time to slowly start buying, accumulate good quality stocks on sale, and go from there. That's the way to build your portfolio. So with that, let's jump in here. Look at the great stocks with the volume more than 1 million shares traded, and Altman Z score more than 2. That tells you financially these companies are sound. These companies are not going to go bankrupt. And quick ratio is more than 1. The reason I look at the quick ratio is a little better than the current ratio because it looks at most liquid assets versus all the current assets. So it tells you it's a liquidity ratio. It tells you company has got financial strength to take care of short-term obligations. Also excluded Chinese stocks because they seem to be not doing great of late. So there are no Chinese stocks in this list here. So with that, let's jump in. Look, we got here top software stocks. What I've done is I've sorted this by market capitalization. So stocks at the top have got great high market cap. Look, we got Microsoft and Google at the top here. Both have got nice $1 trillion plus market cap, as you can see here. If you were to pick one of the two, if you're a person who wants to buy one of these two, I would rather go with the Google here with the higher overall score. The overall score is computed using the growth, profitability, and finance as well as valuation. So with all those metrics in mind, Google seems to be a better buy than Microsoft at the current moment. And as you can see here, from a net margin perspective, Microsoft is a little better than Google. But as you scan through here, from a debt perspective, Google has got lower debt, and quick ratio is better in Google. And as you can see here, Google has got a lot of cash here, $139 billion of cash. With all these things into consideration, Google is better, but you could buy Microsoft also. It's a great company. Look, both these companies have got nice growth here when it comes to the growth, but Google's growth is much better compared to Microsoft growth. And then we have to look at the future expectation here. From a future expectation perspective, Google has got more earnings per share growth in the future for next year versus Microsoft. So that's one of the reason Google came in the top here with the nice overall score of 93. And then you got a few more here. We got Meta. Meta has got even more future projection for earnings per share as well as revenue growth here. And Meta also has nice net margin here, 33% net margin. Company is making money. And look, all these three stocks have got nice cash here. Look at the cash and the balance sheet. These companies are rock solid. And also look at the free cash flow. Every 12 months they bring in nice amount of free cash flow here. Highest free cash flow is in Google here, bringing in $67 billion of free cash every 12 months. That's a great metric here. And then we got few more here. We got Adobe and CRM. Both are my favorites. Adobe is doing great, as you can see here. Adobe off late is down. Look at the RSI here, relative strength index. This indicates if the stock has pulled back pretty hard in past few days. Look at the Adobe's RSI here, 25. That tells you Adobe has pulled back pretty hard off late. And look at the net margin, 31%. So I say, go buy some Adobe. It's a great stock. I can't believe the stock has come below $500. It's a great bargain at this time. I would be buying Adobe here. And look at Adobe as you can scan through here. Adobe has got nice $5 billion of cash. They generate $6.8 billion every 12 months. And look at the expectation for next year. It's great. It's one of the highest so far. So I would say go buy some Adobe. It's a great stock here. And then you got CRM, Mark Benioff's company. And it's also a good company. But as you can scan through here, their net margin is relatively low compared to Adobe. But I say it's also a good company. You could buy some CRM or Salesforce also. And we got few more as you can scan through here. Keep watching the cash. Many of these companies are cash cows with solid cash. And look, RSI perspective, all these stocks are sold off pretty hard. So I say, take a look at this list here, buy these quality stocks, and pay attention to the overall score. As an example, we got Shopify and Snowflake here. One of the reasons they're down is look here, overall score for Snowflake and SE especially, they're pretty low. They're in the teens. That's one of the reason they're not as quality compared to other stocks. Look, if Shopify is a good one here, overall score is 75. You could take advantage and buy some Shopify, given it's down big time here. It's got nice 63% net margin. I also love Indian company called Infosys. That's a great one, low price stock here. Infosys has got 91 as the overall score. You could take advantage and buy some Infosys at the rock bottom price here. And you could also buy other names here. I love INTU, SAP, even ServiceNow, all good ones. You could take advantage and buy at this time here. So with that, these are all great names. I say, take a look at this list here and don't worry about the market. Keep buying some of these great names. You will do great. And also take a look at the net margin. If you're afraid of money losing companies like Snowflake, like SE and Snapchat, you go after money making companies with nice net margin. Look, we got here my favorite, which is Fortinet. It's into cyber security. Cyber security is a secular trend. You could buy some Fortinet here and go from there. And we also have a few more names. I like Datadog, even though it's losing money right now. It's a great stock to buy. They got nice data visualization platform. And we got a few more as you scan through here. I love many of these companies. Look at Synopsys. It's a great net margin. You could buy some Synopsys here. Take advantage of this down market. Look at the overall score. Very good overall score here. And CrowdStrike, even though it's a negative net margin, I would buy some CrowdStrike. It's also one of my favorite. And then you got Trade Desk. It's also a great company. Stock is down, as you can see here, with the RSI of 47. You could buy some Trade Desk here. Look at the next year's estimates for Trade Desk. Great here. And same story with CrowdStrike. Look at the future expectation for CrowdStrike. It's great. This company is also going to do very well. And more important, look at Datadog here. Look at the future expectation for Datadog here. They got nice EPS expectation as well as revenue expectation for the future. That tells you analysts are upbeat. And one more thing I must point out is Snowflake here. Snowflake, look at the future expectation. Great future expectation here. 125% EPS growth and 66% revenue growth. That tells you this company can do very well. Analysts are bullish about this company. So with that, I say take a look at the EPS growth and revenue growth. Whenever they are double digits up, that tells you analysts are bullish. Given the stocks are dropped off here with the market-wide sell-off, pick up some of those names and accumulate great portfolio. So with that, let's jump in here and look at the continuation. I would apply same methodology here. Keep watching the net margin. If you're a little conservative, go after net margin positive companies like Match.com as example. ANSS is a good one here, and we got a few more like EPAM, Take-Two Interactive, which is one of my favorite. Checkpoint Software, which is going higher, as you can see here. This has been down for a long time. Now it's going higher. And we got a few more names with a positive net margin like Akamai and Pinterest. Both are my favorites. You can take a look at those also. And also take a look at the next year EPS and revenue. Companies with nice EPS and revenue estimates like Zscaler, you could go after that one. Companies beaten down big time here. And also look at DoorDash here. It's also doing very well. Very good estimation for next year. Along with Match.com. I love Unity. Look at the Unity here. They got nice expectation for the future here. 43% EPS and 29% revenue. And Tulio has got great next year expectation again. You could go after that one too. That's how you kind of buy these quality names here in this downturn and go from there. And look at the cash. Look, many of these companies have got nice cash position here. You could focus on a nice cash position, buy some of those names. And if you're conservative, go after free cash flow positive companies. So they will serve you very well. You might lose some early stage companies, but you'll get great companies with solid free cash flow here, like EA. Look at the EA, Electronic Arts, $1.6 billion free cash flow. That's a good company to buy. And as you scan through here, we got one more here, CDW. It also has got nice free cash flow here, $1.2 billion. You could buy that one too here. And we got Akamai, same story, nice free cash flow. You could go after such companies. You will do very well. And if you want to go after companies with the negative free cash flow, make sure you're going after the companies with nice expectation for the future. Like as example, I love Unity Software here. Even though free cash flow is negative, look at the future expectation for Unity Software. That's solid. Even Tulio, also same story here. You could take a look at such names here where free cash flow is not very high triple digit negative, but it's double digits or single digit. You could go for such companies here. So with that, what we'll do next is we'll look at stocks with a price less than $10 and volume more than 1 million shares. Altman Z-score greater than 2 tells you these are stable companies with the rock solid financials. Quick ratio more than 1, that tells you these companies can easily meet short-term financial obligations, and no Chinese stocks. With that, let's jump in. Look, this is a very short list here. We got all the stocks, the price less than $10. Look, all the stocks are less than $10. And we sorted by market cap, the highest market cap and top here. So these are solid companies with high market cap at the top. And my favorites are, Wipro, Indian company. It also pays dividend, as many of you know here. Nice overall score, as you see here. It's done 99% in last 5 years. That's good. And look, RSI is 41 stock is sold off here. And company is generating, it's a growth company with a nice growth when it comes to top line sales, and also nice expectation for the future. And look, they got $4.6 billion of cash, free cash flow positive company. You cannot go wrong with Wipro. You could buy some Wipro. Zynga, I think the train has moved from the station here. This probably will be acquired by Take Two. I think probably it's good to not look at Zynga as of now. And then you got a few more as you scan through here. I think all you should look at some of these names here and buy them slowly and take advantage of this downturn. Keep watching the future expectation here. Some names have got great future expectation, like Iron Source, just a $6 company. And look, they got nice future expectation. You could look at that one too. And even COMP, same story, nice future expectations and also positive cash flow that tells you these companies got enough money. And Altman Z score is also pretty good here. That tells you these companies have got solid financials. I know many of you are trading or buying skills. Skills used to be market darling a while ago, but now look, skills has got you know, it still has got good revenue growth as you see here. It's a net margin negative company. It's got $540 million of cash, not too bad. Company can withstand. It's got a nice Altman Z score. If you can take some short-term pain, you could buy some skills. Only problem I have is skills is right now it's losing money. Look at the net margin. It's a losing money. It's a double-digit money loser. So that's why you got to be a little bit careful. But if you're long term, if you want to hold long term, you could buy some skills. Still, market cap is good, $1.7 billion market cap. And look at the target price for skills. It's $15 versus current price of 2.89. And as you scan through, we got a few companies with nice future, nice sales growth here. Look, both CleanSpark as well as IDEX have got nice sales growth. And from a future expectation perspective, looks like IDEX has got better future expectations than CleanSpark. But CleanSpark has got overall higher score here. That tells you that's a good buy at this level here. And as usual, take a look at the overall score here. Look, we got any here, Spear. It's got a nice not any PALT here. It's got a nice overall score of 98. That tells you it's a solid company here. It's got less cash, just $11 million cash here. And very low market cap, but looks like it's got nice overall score. You could take a look at that one also here. And we got DTST. You could take a look at that one too. It's got relatively higher score along with the SSNT. So with that, I say don't worry about market sell-off. Buy some quality stocks and stick with it. You will do great. So with that, thank you very much. Happy investing and trading. Please subscribe.